Vibe this, vibe that. If Celsius really wanted to create an impactful flavor, maybe the next one should be PepsiCo Vibe. I'll get to some of my thoughts around that introductory statement a bit later in this content, but as I normally do with my quarterly financial content of publicly traded functional CPG brands, I will use the recently filed earnings report, notes I took from listening to the earnings conference call, and any relevant publicly disclosed news. In this case, it's for the 2023 quarter two period ending June 30th of 2023 for Celsius Holdings. And this will obviously allow me to update you on the performance of the Celsius energy drinks, but I will also use all of this information as a backdrop to discuss market insights within the broader energy beverage category. That being said, let's start with some revenue numbers to set the foundation. In the quarter, Celsius Holdings had revenue of $325.9 million, which was up 112% year over year. On a quarter over quarter sequential basis, revenue grew an equally impressive 25%. This is also the first time in company history that they exceeded $300 million in quarterly revenue. Breaking out the revenue geographically, North American sales were $310.8 million, which was up 114% year over year. This doubling of growth was driven by increases in distribution points and growth per location. And additional kind of cool data point shared by Celsius, according to some IRI data over the last 52 weeks, ending June 18th of 2023, Celsius was again the number one brand driver in terms of dollar and unit growth in the energy drinks category. Celsius was responsible for 23% of the categorical growth, driving $666.5 million in incremental sales. On the international side, Celsius had quarterly revenue of 15.1%, which was up 76% year over year. This was also up strongly on a quarter over quarter sequential basis. I've mentioned this a few times in previous content, but this hasn't been really smooth sailing internationally for the energy drink brand that acquired its Nordic distributor in late 2019 and formed a joint venture with its Chinese partner. With global macroeconomic headwinds throughout the last few years, Celsius has smartly focused its attention and resources on fueling the insane growth within the domestic market. But that's already starting to change inside of Celsius as they have been laying the groundwork with PepsiCo to capture what they believe is a significant opportunity for incremental growth over the next 3 to 5 years. In early 2024, we should see Celsius expand internationally into a few of the countries that are most familiar with the energy drinks category. Then Celsius and PepsiCo will use that as a blueprint in a handful of other countries for further expansion over the next few years. If you're trying to kind of gauge long term what that potential opportunity is for Celsius, remember that the international revenue portion of the Monster Energy and Coca Cola distribution partnership is around 40% of Monster Energy's total revenue. But international only makes up around 5% of the total Celsius revenue. Now, that's comparing apples and oranges for several reasons, including that Celsius doesn't have any of those cheaper portfolio brand options to sell internationally, but even a decent go to market strategy in some of those different markets that are popular markets for energy drinks should yield strong results. Now, if you consume my Celsius content in the past, this next section is usually much more robust, but because of that August 2022 distribution and investment deal with PepsiCo, things have gotten a bit more simplified from the perspective of Celsius and cloudier from my perspective. But it's really all good. There's still some retail and distribution updates to go through that I think is extremely important. First and foremost, the entire DSD distributor transition was completed by 2022 year end. So Celsius is fully within the PepsiCo distribution system. In terms of consumption growth, IRI data for the period ending June 18th of 2023 shows that Celsius grew 136% year over year for the last 4 weeks, and then 131% year over year over the last 12 weeks. That's significantly larger than the broader energy category, which grew 17.5% year over year the last 4 weeks and 16.4% over the last 12-week period. In addition, according to trailing 4 weeks of IRI all track channel data for that same period, June 18th of 2023, Celsius is now securely the third largest energy drink brand in the category. Its market share went from 4.3% in the second quarter of last year to 8.6% now. Celsius energy drinks are carried in over 225,000 locations in the United States, and average items carried per store has increased since the PepsiCo partnership, with Celsius sitting at 13.6 items per store compared to 8.6 the previous year. All of that leads to the brand's all commodity volume being just under 97% compared to slightly under 80% the previous year. Additionally, in convenience stores, which, as you know, is the granddaddy of them all in terms of sales channel for energy drinks, Celsius has seen its ACV increase to 94.9%, which is absurdly up on a year over year comparative basis. CEO John Feldley noted that the company was quite amazed with how quickly the ACV has come together. Internally, they believed it would potentially take another 12 to 15 months, I think he said, to get that to 95% ACV. So, with the current velocity numbers, better placements in locations, and then potentially getting to 15 to 17 items per store by the end of the year, Celsius could be looking at a 10% market share in the energy drinks category quite quickly. Now, moving on to a sales channel I always want to mention, and that is e commerce and specifically Amazon. And I know I sound like a broken record at this point, but my belief is that the digital channel is the next frontier of beverage retailing, and having a long term integrated sales channel strategy needs to be centered around it. This has been an area of huge strength for Celsius Holdings over the last several years, so they understand what I'm talking about. They are now firmly the second best selling energy drink on Amazon behind only Monster Energy, and honestly, they're within striking distance of them now. In this quarter, Celsius reported generating $28.2 million in Amazon revenue. That's up 108% year over year. And it means Amazon accounts for about 8.7% of the total Celsius Holdings revenue, which is honestly quite impressive for a beverage brand. Another alt channel I wanted to highlight was food service, which now makes up a little more than 11% of the energy drink brand's revenue that comes from PepsiCo. Celsius is seeing a long runway of growth opportunities in the food service channel, as they've been able to expand recently into thousands of colleges, hospitals, hotels, casinos, and restaurant locations in the United States. The other sales channel I want to give some additional color to is within the wholesale clubs like Costco, Sam's Club, and BJ's Wholesale. In this quarter, Celsius sold $67.9 million in energy drinks through the club channel, which was up 120% year over year. Specifically, Costco accounted for 13% of the total Celsius revenue in the second quarter. That's a lot of energy drinks that are being sold through wholesale clubs, but I think there's substantially more runway left in the club channel for Celsius. It could be north of $250 million in 2023, which does have some margin impacts though, as gross margins are typically lower because of the channel's pricing model, but also there's some costs that go into those irregular pack sizes. But this might be a great time to shift into what I was talking about in that introductory statement. I need to kind of start off by saying I misjudged the Celsius and PepsiCo partnership. I was definitely not bearish on the tie up, but I didn't think it would perform this well this early. In the current quarter, net sales to PepsiCo amounted to $184.8 million. And I mentioned earlier, but huge successes are apparent in them gaining additional distribution in the kind of convenience channel and then food service opportunities. But beyond that, you're seeing huge increases in items per store, whether that's from merchandising resets that PepsiCo is assisting with or through PepsiCo coolers. And this could grow even more substantially in the future as retailers increase facings for energy drinks. But overall, just want to say kudos to the Celsius team for what appears to be, at least from an outsider's perspective, a seamless transition. But I hope you enjoyed this YouTube video. If you did, consider hitting the like button to support me. Also, help me get to my new short-term goal of 3,000 subscribers by hitting that subscribe button. I'd love to see you join me on this journey, but we need to fix the fact that basically 80% of you that are watching this YouTube video right now are not subscribed to my channel, and that makes me extremely sad. But I do want to thank you for tuning in, and I'll see you on the next one.